Hey, hello everyone, and welcome to Elliott Wave Cafe for the weekly coverage of the market. Something that we do, we try to do at least every Saturday here, and this will be posting on YouTube. I'm Chris, I'm the market strategist here, and we're going to be taking a look at the indices. And then, as always, we'll follow up with Bitcoin and Ethereum, and then, we'll take a look at gold, silver, oil, and, then we'll wrap things up with some final comments. So, just a basic walkthrough by looking at the weekly charts only. I think they provide a pretty good picture of what's happening overall. I know we, tend to kind of get caught up in the daily and intraday moves at times, but not losing sight of the larger picture, it's quite important. And what I'm seeing right now here on the S&P 500 on these weekly timeframes, it is a bull market. We are definitely moving from the lower left to the upper right. We have taken the highs from back in 2021, and we had a little bit of a correction in April, and now we're moving towards new all-time high. This week, was a little bit of a back and forth. We sold off a little bit. I think it was on Thursday. We created an outside day reversal on the daily charts. I talk about that daily into my updates here into Elliott Wave Cafe on our website. But we came back on Friday and we closed pretty strongly. And you'll see as we're going through the rest of the indices, the moment that you have an outside day or a bearish day reversal that doesn't get confirmed, there is a risk that gets negated, and then you move back to the upside. So as long as you're above the 10-week moving average, I think this is a positive development. We're in a bull market. We're above the 200-day, which you can see in here in a 40-week. So, the right side of the market is the long side, and the path of least resistance remains to the upside in indices. So I find very hard to try to fight this market in any way. We gotta let it continue to develop. So that's the S&P 500. Let's take a quick look at the RSP. This is the equal weight. This one was a little bit slower to respond, which means that larger cap stocks perform much better. You can look at Nvidia, even Apple came back, Google continues to be strong, Microsoft. So, the large stocks, have a good print on the market, but equal weight, trades pretty well as well. I don't have a problem with it. We came back here in this 3-week correction and we retested the highs of the breakout. From late last year, we had the high, then the breakout. In here happened in February. Looks like February, March. We came back, retested it, and we're moving back up higher. We find support at the 10-week moving average. So, nothing concerning in this pattern at all. And if you do drop back below this line, then things can start to look a bit more difficult. But for now, I continue to remain extremely positive on this. Nasdaq looks even better than Nasdaq 100. It has made a new weekly closing high. An extremely bullish development. Looks pretty good, and it was just a correction. We made a new high, and it's hard to argue with this at the moment, right? You could say that this is that this correction is a fourth wave, but you could also say it's a second wave. So there is no way of knowing, and I will not bet on this being a final move. I would rather let it continue and show me that it is a final move by failing first, and that definitely has not happened yet. And like I said last week, I'm still looking forward because we've only had about 4 weeks of bullish price action last week. This is the fifth one, and I think we're probably going to get at least another probably 2, 3, if not 4 weeks of bullish price action before we probably pull back a little bit. So, I'm still pretty positive, and the markets are looking pretty strong by what I'm seeing here in the Nasdaq 100. Nasdaq Composite, looks even better. The volume it's higher than average. there was a pretty scary drop back here into 15,250, and it, like I said, if there's no continuation of follow through, and you notice that bulls are stepping right in, then you got to get bullish right away. Otherwise, you run the risk of not participating, and the market's actually starting to push higher. I talked, excuse me, I talked to this about these failures, in our daily updates as well. So this is something that it's encouraging. You break corrections and you move higher, you break corrections, you move higher, and who's to know how much longer this can continue. We'll watch it, obviously, day by day, but from this weekly perspective, this is pretty healthy. Let's take a look at the semiconductors here. We talked last week. It was a very small break higher. It was a new closing weekly high, which was encouraging, and we follow again this week. We had Nvidia earnings. Then that's when the market did that kind of outside reversal day on the S&P and other markets, and then Friday just went pushed back to the upside. And semiconductors are in a bull market. I mean, look, you got to look at the 40-week moving average. If that's trending higher and prices are above it, it's almost suicide to be bearish, right? Because the market is showing you that it's trending to the upside. Sure, you can squeeze little sell-offs here and there, but the odds are against you when these lines are pushing to the upside. So again, a very risky thing. It's not like back here, right, when you broke below it and then you started a pretty bearish development. Until that happens, and that takes a while to happen, right, unless you have an extreme event that pushes prices below this. And even if that happens, usually if this trends higher, that dip is going to get bought very quickly. So it takes a while for the markets to roll over. I talked about this before, and this is a pretty encouraging development. I'm pretty bullish semiconductors. One of my, decent positions here is Taiwan Semi, and they continue to act pretty well. Not just that stock, but I'm sorry, a lot of others. So again, this is the support line, and probably if we get any dips, we're going to try to find buyers over there. Dow Jones Industrial. Now there's a bit of divergence here because this one pushed the other way. There were probably a few stocks that did not, like whatever news are out there, or whatever developments are, maybe with the dollar, with the rates, with the Fed. I mean, we can go crazy talking around in circles and debating, macroeconomics, till blue in the face. But price is the only, true thing that we can follow. And when that says up, it is up, and following that along, it's usually the smart bet. Now, Dow Jones here, shows a little bit of a failure after that breakout. It's coming back into the 10-week. I'm going to be watching closely how this week behaves. If it falls in line with the rest of the markets, we should see a bullish week next week, and a continuation of this uptrend. It basically came back, almost retested this breakout zone. It didn't manage to get all the way down there, but just the one from the beginning of the year. We found support here for a couple of weeks. We went nowhere. Then bulls came in on higher volume and pushed this market higher. So, a little bit of a sell-off here. Not too concerning yet, but definitely something to watch going into the next week. Now, Russell, it's a market that, everybody's waiting for this thing to kind of break out and eventually catch up with the rest of the markets. Now, this is the first time that the distance between the 10-week moving average and the 40-week, it's quite large. The prior attempts failed, and you can see how the 10-week rolled over very quickly. It was one attempt right here in March of 2023, then another one back here in August of 2023 before we pulled back. This time around, this gap between the moving average is just spreading out, which is encouraging, which means that we could be in the initial stages of beginning a larger move. Now, this 210 is very important, and it hasn't broken out yet. I do like in here, I started the small positions in IWM, and I'm looking to add to it on the break of 210. I will get very aggressive if this level gets taken out. So, we'll talk about that in the daily videos, kind of what stocks I'm watching, what I'm getting into, what I'm getting out of. But the main indices are the ones that kind of gives us direction. So, if those are trending well, then most of the stocks should be doing good. And then it's another thing of picking stocks that have good relative strength, that have a good fundamental background, and that have, let's say, good sponsorship from mutual funds and hedge funds and things of that nature, pension funds, people that own them, because that's where support comes in, and those people will buy them, and that's where that's how they get their volume and their participation. So anyway, we'll take a look at IWM, but I'm pretty excited to see a breakout above 210. We'll see if that happens. Right now, the 10-week provided a little bit of a support. Not fully out of the woods yet, but again, if that's a second wave in some type of a flat, we're looking much higher. So let's keep an eye on that. Bitcoin in here again, we're long. We started the small position on the break of this couple of weeks in here with this breakout. We added to that on the break of the following level. I'm going to look to be adding more on the break of 72,500, and then go long for the next move that can probably take us towards 100,000. So again, it was just a correction that finished back here in May, right? I think it was when we dropped, and we created this little bit of a hammer, a week of almost nothing, and then the bulls came back. We're back above the 10-week moving average, clearly trending on the 40-week. So there's no argument here. Bitcoin remains in a bullish trend, and we're looking for higher prices. If you fall back below 60K, then yes, then you got to get defensive, and you got to kind of start selling a little bit of the positions, and just kind of being defensive up until you're reaching maybe back towards a rising 200-day moving average. But oh my goodness, I just clicked on that. Jesus. Okay. So yeah, again, a pretty bullish Bitcoin here. I like what I'm seeing. And again, is this a fourth wave or is it a second wave? Who's to tell? We'll find out once the market makes a new high, and once it does, it can bring all kind of an additional buyers, and especially now that we have the ETFs. So there's no point in being negative right here. Ethereum again, the ETF just got approved. You had a correction here, and then the market pushed up higher. You had a small correction here, the market pushed up higher. You have another correction here, the market is pushing up higher. You had the correction here, breakouts. We got to trust them. If we don't trust them, then what's the point of using these correction and these trend lines and these breakouts for trading? So we got to trust the move in Ethereum. There might be some consolidation in here. Yeah, it's a bit fast. It's one of the strongest weeks we've had in a long time in Ethereum, but hey, it continues to look pretty good, and I think it's on its way of attacking this level at 4,800, and then probably much higher than that. So I remain bullish on this. Again, there's no argument here with the market, and I would be a buyer on dips towards the 10-week moving average on Ethereum. So this one looks good as well, confirming what's going on with Bitcoin and crypto in general. It's coming back in favor. I think the Congress it's passing these bills, and they're starting to become more friendly towards. I don't care about the politics of it, but it's just that if you're being friendly toward it, that's a positive news for the field. Treasury yields are being flat at about 447. Market doesn't really care unless you have some kind of a big spike in yields and a big spike in the dollar. That should come with some Fed news, or with let's say out of ordinary economic data, and that really hasn't happened. The Fed is kind of out of the way. They do talk all kind of things, but at the moment, the market seems not to care about any more rate hikes, right? I think that's pretty much kind of settled, and probably rate cuts are still on the table. They just don't know when, and that's a positive outlook for the market. The dollar is being flat. Not a lot of you can really judge the market right now by the dollar index. There is nothing here. Sure, it could be a 1-2-1-2 and you can break, or it could be an ABC and you can fall. I guess if you pull a trend line here and you start to break 106, you got to get a bit defensive on the market, and probably the price of the S&P will show you that. Gold continues to remain in a bull market. The 200-day moving average here, it's just about to cross that big level at about 2100. We could be still in the initial phases of a large bull market in gold and silver. This 10-week, whoever bought this dip, enjoyed some gains here. Now you have a pretty bearish close. We'll see if we're going to get a continuation on it. You might not. I mean, there might be bulls coming up in here. So, if I were to be a gold holder here, maybe on a weekly close below this, or a couple of daily closes below it, you can kind of reduce the position, then see how the market reacts and just buy them back. But other than that, there's not much to do. Just be patient with it, because I think we cracked the major level, and that's an important development if you look at the monthly charts. Silver also just a nice run, doesn't do anything wrong, looks good. So I'd continue to be a buyer of dips. I mean, the first level will be 29 in here. Maybe it's a bit too extended above the 10-week. So eventually it's going to catch up with that. Buyers will step back, and then we'll continue to go in silver as well. That's my thinking there. And then oil, it's been in lower land, tried to break, came back lower. Now it's holding the 77. On the smaller time frames, when I talk about this, again, right here on the daily drips and the double shots, there is probably a small fourth wave in here, maybe another drop, but it's really irrelevant. Oil, it's quite an irrelevant market at the moment. It doesn't do anything. It hasn't been doing anything since this big drop here in the end of 2022. It's been just a sideways mess, and very, very bad for trading. So unless you're in a futures and you're trying to catch little swings and create maybe some trading levels, go up and down, but that's they could be very dangerous if you don't know what you're doing. So that's that. And then volatility index, it's at 12. You can argue with the market when the volatility is at 12. Usually that tells you trending bullish market. So we had an attempt here, went above 21. They quickly sold it, and this one gives me, you could say, well, if it's a 12, it's got nowhere to go but up. Sure, but you can also stay at 12 for months on end, or between 12 and 14 and do nothing, right? And while the market is trending. So I would not take this as an indication that the market it's extended or it's super bullish or anything like that. I think this is totally fine, and it just kind of confirms what's out there. Anyway, thanks for watching. As always, you can come and check out Elliott Wave Cafe if you want. You can send me a message, leave your comments. My email is up here on the daily drips at the bottom. We have a chat room in here as well. There's all kind of things. So anyway, thanks for watching, everyone, and I'll see you next week. Bye-bye.